What if the ride that you took to work this morning is already headed for extinction? A single $4.20 robo-taxi fare in Austin just lit the fuse on what consulting giant McKinsey says could be a $480 billion market, and it's coming a decade faster than experts predicted. In 1908, Henry Ford's first Model T rolled off the assembly line. Within 20 years, the horse-drawn carriage industry vanished. Blacksmiths, stable operators, carriage makers, entire professions disappeared. Today, a similar disruption's unfolding, only this time it's measured in quarters, not decades. Last Sunday in Austin, Texas, Tesla launched its robotaxi service. Tesla CEO Elon Musk said on X that the robotaxi launch began in Austin on Sunday afternoon with customers paying a $4.20 flat fee. This wasn't just a product launch. It was the starting gun for what McKinsey projects will become a $378 to $486 billion in revenue for autonomous ride-hailing services in North America and Europe by 2035. That's in just 2 continents in 1 decade. As you see in the chart, China, Europe, Japan, and the US are all on track to see major growth by 2040. The massive revenue forecast for robotaxis is backed by how fast autonomous vehicles are expected to be adopted. The safety numbers that changed everything. Look at the data that's making this inevitable. Tesla demonstrated over 3.2 million miles per accident on full self-driving (FSD) in 2023, outperforming human-driven Teslas at 588,000 miles and Waymo at 476,000 miles. That's 5.4 times safer than human drivers. Insurance companies are recalculating their entire business models. But safety isn't what's driving adoption, economics is. When you remove the driver, who takes 60 to 80% of every fare, the unit economics transform completely. The quiet leaders are already winning. While Tesla grabbed headlines last week, the real story is who's already operating at scale. Waymo is already doing what Tesla's aiming for, with over 250,000 fully autonomous rides happening each week across cities like San Francisco, Phoenix, and LA. Waymo isn't talking, it's delivering. Think about that. 250,000 rides every week with no drivers. Meanwhile, in China, the numbers are even more staggering. According to its IPO filing, Pony.ai operates over 250 robotaxi vehicles, with each vehicle completing an average of 15 orders per day. A report from Huajin Securities indicates that Apollo Go has launched nearly 1,000 robotaxi vehicles across China, with its daily order volume in Wuhan now on par with local traditional taxis. In Wuhan, robots already match human taxi volume. The manufacturing moat nobody is discussing. Here's what separates the dreamers from the dominators: scale. Waymo's challenge isn't just technology, they've solved that. It's manufacturing. Tesla's advantage is that they already produce vehicles at massive scale. You see Tesla cars everywhere on the street. They have mass manufacturing capacity, and it pioneered remote software updates it can use for self-driving upgrades. This is why Volkswagen is entering the race too. The sector offers enough of an opportunity for VW to greenlight the production of at least 10,000 robotaxi vehicles, potentially more. China's trillion-dollar head start. While American companies navigate regulations, China's deploying with military precision. Pony.ai sold 20 million American depository shares in the IPO, raising just over $260 million. It also raised an additional $153 million in further private placements. The company achieved over $5 billion valuation on its first trading day. Then there's WeRide, known for autonomous taxis, vans, buses, and street sweepers. It's testing and conducting commercial pilots in 30 cities across 7 countries. Robotaxi services were $2.6 million in the fourth quarter of 2024 for Pony.ai, with revenue growth of 422% year over year. The platform play everyone's missing. The smartest move in this space isn't building robots, it's controlling distribution. Uber said last week it was partnering with Pony.ai to deploy the China-based robotaxi developers' vehicles onto its ride-hailing platform. Uber is partnering with everyone. Waymo, Pony.ai, WeRide, they don't need to solve autonomous driving. They already own the demand. Here are 3 catalysts about to accelerate everything. 1. Regulatory clarity is finally here. In 2022, the global robotaxi market was valued at $1.76 billion, while the revenue growth expectation for 2030 is pegged at $99 billion, with a compound annual growth rate of 65%. A 65% compound annual growth rate assumes current regulatory frameworks. California just approved expansion, China's racing ahead, and Europe's creating unified standards. 2. The capital flood has started. In July, Alphabet's then CFO Ruth Porat announced a multi-year investment by Google's parent into Waymo on an earnings call, which amounted to just over $5 billion in total. And then there's Amazon Zoox, which is ramping up production. Chinese companies are raising hundreds of millions in US markets too. 3. Customer acceptance tipped. Since launching in November 2019, WeRide's robotaxis have completed 1,700 days of commercial operations on open roads in China and the Middle East without a single accident. Think about that. 5 years, 0 accidents, millions of rides completed. The safety argument is over. Waymo and Tesla both show lower crash rates than human drivers, but it's important to know that Tesla's system is level 2, a driver still needed, while Waymo is level 4, fully driverless. This makes Waymo's safety record even more impressive. Here's the investment landscape so far. For pure plays, you have Pony.ai at a $5 billion valuation, WeRide, $4 billion valuation, operating in 30 cities. Then you have platform aggregators like Uber and Alphabet. Uber's partnering with all major players. Alphabet, Google, has Waymo. Then you have manufacturing scale. Tesla, they're in the early stages, but massive production capacity. And then there's Volkswagen, with a 10,000 unit initial commitment. For dark horses, you have Amazon Zoox, targeting 10,000 units a year. Then you also have Baidu, China's version of Google, with 1,000 vehicles already deployed in China. Not every player survives. GM poured $10 billion into Cruise before retreating, and Tesla faces several federal probes over FSD crashes in bad weather. And here's the uncomfortable truth. It's not about whether robotaxis will transform transportation. They will. The only questions are how fast and who wins. Here's a timeline reality check. Analysts and industry experts note that establishing robotaxis may still take years, mainly due to the challenges of ensuring safety and reliability. Some analysts believe Tesla can expand faster, in part because Waymo has helped pave the way by overcoming regulatory and technical challenges. Waymo spent 15 years solving the tech, and now everyone's copying the playbook. By 2027, major cities will have thousands of robotaxis. By 2030, urban car ownership becomes economically irrational. The race started last week at $4.20 a ride. Where it ends will create the biggest transportation fortunes since the railroad barons. Will you participate or watch? Stay tuned for the next video. Don't forget to give this video a like and subscribe to the channel for more.